Good morning, esteemed guests and participants from around the globe. Myself, CA Shweta Goyal, Secretary of Sustainability Reporting Standard Board of ICI, would like to welcome you to our today's webinar, Navigating the GRI Universal Standards, a Comprehensive Guide. This is a series 2 of this GRI webinar. As sustainability reporting becomes a cornerstone of transparent and responsible business practice, the Global Reporting Initiative GRI standards provide a robust framework to disclose impacts, build trust, and align with stakeholder expectations. Among these, the Universal Standards GRI 1, 2, and 3 form the foundation for any meaningful sustainability report, ensuring clarity, consistency, and credibility in reporting. Our today's session is designed to provide you with an in-depth understanding of the universal standard, their recent updates, and practical guidance on how to apply them effectively. Building upon the success of our previous webinar on the same topic, this is our second session, series led by CA Kaushik Mahadevan ji. He is an expert speaker which delves deeper into the intricacies of a GRI universal standard. Now, I would like to request CA Chindu Chandranji to just introduce our guest speaker of today.
We welcome you, sir. Kaushik Mahadevan, sir, is a professional with over 2 decades of experience in ERP, accounting, pre-sales, and requirement analysis. He's a GRI certified sustainability professional, backed with a postgraduate program in AI, and thereby combining the financial expertise with a deep understanding of technology, strategy, and sustainability. His leadership has been instrumental in driving business transformation and digitization efforts, leveraging cutting edge technologies like ESG, AI, ML, and deep learning. We welcome you, sir, for today's session.
Thank you so much, madam. It's an absolute pleasure. And thanks for considering me for the second time. I hope I did something right the last time, that I got this opportunity again to actually speak about a topic which I feel that, is gaining prominence, importance. And I believe, let's say the participants, who were there in the last session, as well as, who are going to join in today, are equally enthusiastic, about, let's say, what GRI has to actually prescribe from a ESG reporting standpoint. Now, unlike, let's say, the previous sessions that we have had, or rather the previous session that we had, this session delves a little deeper into, let's say, what, let's say, GRI is actually all about. How do you apply it? What are the pitfalls? How does it align with, let's say, some of the strategies that, most of the organizations look for in their, let's say, ESG journey. I'll try to simplify the aspects, which is thanks to, let's say, some of my recent learnings out of a few projects that I have been a part of, and which we are actually executing from a ESG reporting and ESG consulting point of view. Yeah. Thank you so much again for having me over here. So we are here to speak about a very intricate topic, navigating the GRI universal standards. Let me know if you're able to see my screen and if everything is clear and audible.
Yes, sir.
Thank you. So, I think in the last session also had actually projected this particular image. I believe some of the participants, and at least, a few of, let's say, the contemporaries, my colleagues, my friends, some of them are actually joining today's session as well, because I believe, they had significant insights from the last session that we have actually had. And some of them are actually pursuing, let's say, this as a full-time profession as well. And some of them are actually evaluating at a very first level. Now, for the unindated, what you're seeing on the screen is a very, very popular image. I mean, if you are somebody who's actually following, let's say, ESG or sustainability very closely, you would have actually come across this particular image in the past. This image, I mean, it's, again, if you read, it has a very good, let's say, messaging, which says that, someday everything will be recyclable. Yeah. Until then, let's sort it out together. And you have a very, good demarcation of, what is recyclable or what needs to be recycled. And then you have, let's say, landfills, which basically tells, somebody saying that there has to be a clear segregation of, what let's say, how your waste management is supposed to be looking at. But the hand, the human hand, which actually intervenes, kind of tells you that, that is not the case. Both the hollows are actually, leading to a single destination. And that pretty much sums up, where we are as humankind, as mankind, where we are looking at, from a sustainability point of view. And this kind of also becomes the pretext, or let's say the strong point, why ESG or sustainability is actually gaining importance, or why it needs to gain more importance. I believe there are a few organizations doing a lot. ICAI, SRSB being, let's say, few of the let's say leaders on that on this particular space, especially in India, along with, of course, SEBI with its mandate and other stuff. But a lot needs to be done by, let's say, organizations themselves, which also leads me to a very, very popular management one-liner, which I'm sure, all of us actually know, and all of us over here, in fact, the entire audience over here is actually experts in, let's say, numbers and finance. That is something I left behind, after I qualified as a chartered accountant and a cost accountant, because, I kind of actually drifted ways and path in terms of, adopting business consulting and technology per se. So Peter Drucker once is supposed to have said that, what gets measured gets managed. Yeah. And that again, kind of actually, sets a pretext of, what we are about to delve into. The whole thought process of, let's say, GRI, the GRI Universal Standard is one faction of, when guiding organizations, how you are supposed to go about measuring some of the aspects, when it comes to, let's say, ESG reporting. Mind you, the whole thrust or the whole push is actually towards ensuring that, the organizations are able to get to a stage where, there is a significant portion of, what they're trying to report is measurable. Yeah. Some of it is not, some of it definitely there are actually challenges, and which is where, we are trying to dissect and we're trying to understand that, what the guidelines and the frameworks are actually talking about. Needless to say, the ESG clock is actually ticking, and I firmly believe that, it is actually up to us as mankind to ensure that, we take up voluntarily, both at the individual level as well as at the enterprise level, and ensure that, we do our bit to ensure that, the world is a better place, and to also ensure that, we are ensuring the future generation has got a same accessibility to natural resources as much as, what you, me, or, anybody today has got, including all generation X, Y, Alpha, Sigma, everybody put together. A short introduction about myself. I think, Chindu very well covered introducing my credentials in the past. I finished my CA and CWA, got into business and technology consulting. I was a part of successful exits in the past, where we actually sold off our company. I was a co-founder, so I had actually had the privilege of working with, some of great minds in the industry, and sold off that particular company to Schneider Electric. And today I represent a company called Forcia Technologies. I'm a co-founder of this particular company. We focus basically on ESG consulting, as well as, the tech stack as far as ESG is concerned. And I've also embarked on, let's say, being a spokesperson. So I participate in quite a few webinars and quite a few seminars, where I'm able to share, let's say, our experience and, whatever we actually learn from our project experiences. I finished my GRI certification. Today, in fact, very recently, I also finished my CSRD fundamental certification, and now I'm on course to finishing off the CSRD advanced course, along with a few ancillary, small time courses that we're trying to work as well as, get certified on. My whole thought process is that the whole landscape is actually evolving. So if you don't learn or research about this particular topic, you will be kind of actually left behind. And if you're a true, let's say, enthusiast, then I think, putting all your, learnings into practice is also actually, something which is actually important. But then you can only put it into practice, if you learn out of it. And I believe that, we as leaders need to be continuous learners, right? So if you don't actually learn the nuances of, what is happening in a rapidly evolving industry like this, I think it's going to be a little difficult over a period of time. Yeah. The agenda for the day, I think, most of you would have actually received this in your emails, but very quickly, we speak about GRI, set the pretext, so that, some of you who are new to this particular session, I'll give you a quick background about, what GRI is actually all about. which then helps us to delve into, let's say, what, let's say, GRI 1, 2, 3 is actually all about. What are the recent updates? How do you connect the dots in terms of, how does the universal standards, lies as well as, deal or uh, kind of merge with, the topic standards. The whole aspect is that, we need to understand how it well integrates with the universal standards, the common pitfalls, which, let's say, reporting entities are actually facing today. Because mind you, this is something which has actually come in very recently. So something which has actually come very recently in the distant past. I think one needs to be very wary about how you are supposed to go about your reporting, how it needs to be, dealing with your sector standards, how it is supposed to deal with your topic standards, and so on and so forth. Lastly, we will also see that, how, let's say, data accuracy, comparability, as well as, how does it align with the GRI requirements per se. And finally, we open up, let's say, the forum for a quick Q&A. Yeah. Chindu, just halt me, wherever you feel, let's say, the pace is actually a little fast, or if you feel, I'm actually overshooting from a time point of view. Yeah.
Sure, sure, sir.
Sorry, you had something to say, Chindu? Okay. So I think, again, in the last session, we had actually covered this very quickly. There are myriads of frameworks, all across. Now, some of the, let's say, participants also had queries or questions that, why or how are you supposed to pick up, let's say, a certain framework. I'll set some context and pretext over here, because since we are actually speaking specifically about GRI has been actually, one of the earliest, let's say, bodies, established in the late 1997. In fact, in the late 90s, headquartered in Amsterdam. Now, GRI set out to actually, come out, work with very closely with, let's say, the United Nations, and come out with, let's say, guidelines, taking the UN SDG as the pretext. They started evolving as an organization to guide, let's say, organizations worldwide in terms of their journey on the ESG reporting. So their whole focus was to guide organizations to make them aware that, your business decisions are indeed actually impacting, let's say, the economy, the environment, and the society. Simply put, the ESG of things. Yeah. So that's what GRI basically does day in and day out. The purpose of GRI is basically to communicate, let's say, how an organization can and should maintain, record, transcribe, report on the ESG metrics. How does data actually, basically come into the picture in the first place? What sort of data comes into the picture in the first place? Lastly, how does it get converted into ESG metrics, and how do you basically go about your reporting? Because there has to be a certain standardization of sorts, right? So today, if you're reporting something on income tax for, let's say, in India, now we have a very specific, let's say, standardization, thanks to the Income Tax Act, right? So GRI is no different. GRI basically is a framework, is a guidance body which guides organization to go about, how they are supposed to go about when it comes to reporting, let's say, their ESG practices. Simply put, and I think, the majority of today's session, what we are going to cover is, let's say, the universal standards, the one which you're seeing actually over here, which in turn is again broken down into the foundation layer. There's something called the general disclosures, and finally, something called as the material topics. We go a little more deeper, as we keep sliding through in this particular session. Then there is something called the sector standards. So today, GRI very specifically has actually covered about 4 to 6 sectors where they are actually guiding and saying that, how, let's say, an oil and gas or a mining industry, or let's say agriculture, aquaculture is supposed to go about, with respect to their ESG reporting. And they are apparently working on 40 more sectors. What they are doing right now is they are actually taking up the maximum impact sectors to actually start with. And then, they're one by one, they're going to release in the next year or so, is what I'm actually given to understand. So today, simply put, I think there are sector standards very clearly available. If you belong to, let's say, oil and gas, if you belong to mining, if you belong to coal, if you belong to farming, aquaculture, fishing, I think the guidelines are very clearly there from a GRI standpoint. And now I'm given to understand, I think in the near future, I mean, I think in the immediate future, we're going to see sector standards specifically for the BFSI, the financial services. And I think textile and apparel are the other ones, which they are actually, I mean, working on at this point of time. The sector standards in turn, let's say what is applicable for an oil and gas or a mining industry will be completely different, right? That is where, let's say, it granules out and says that, what are the topic standards, yeah? So these are the things, what, let's say, the overall structure of GRI standards actually looks like. The importance of GRI, needless to say, any framework is important, one from a standardization point of view, second from a transparency, because, every organization, when they report, there has to be a standard way of actually, when comparing, let's say, each of these reporting layers, so that, let's say the common man, the authorities, and everybody is able to take an informed decision whether, let's say this is being correctly reported or not. At this point of time, we are given to understand this number might be a little vague, but my research says that, over 12,000 organizations have already started in more than 100 countries to take up GRI as one of the reporting norm. And one of the good things about GRI is, GRI has been a pioneer, as you would have known already, I mean, because they came into existence in the late 90s. Now today they have been in the international market for almost about, let's say 25 plus years, right? So which means that, they kind of know what they are actually doing, and which is why most of the frameworks today align well with GRI. Most of the frameworks also take inferences what GRI actually speaks about. In fact, in India, if you look at, let's say, BRSR very well aligns with, let's say how a GRI guideline basically prescribes, or how it basically works. Yeah. The good thing about GRI is they keep continuously, releasing, let's say, updates and upgrades. There are a lot of courses, which they keep coming out with for, let's say, sustainability enthusiasts. They also keep releasing, let's say, sector specific, topic specific things that are relevant from an ESG reporting point of view, which makes it all the more easier for us to adopt and evolve over a period of time. Yeah. Just to give you a gist on what we actually spoke about, an organization which actually came into existence in 1997. It kind of shifted, in 2016, thanks to, let's say, their dealing with, let's say, United Nations and coming out with, let's say, the modular standards, which is what we're going to see actually today. And post 2021, there was a major update to the universal standards, elucidating, simplifying, let's say, the adoption of, let's say, ESG reporting per se. Yeah. What you're seeing on the screen is exactly how, let's say, the GRI standards basically looks like from a guidance point of view. As I have been saying ever since we started, the GRI standard is actually broken down into universal standards, sector standards, and there is something called as topic standards. Let's see on this particular screen, what each of this basically means. As the name suggests, universal standards. This is something, which is kind of applicable for every organization, whichever sector that you are actually belonging to. The moment you adopt, let's say, GRI as a framework, it is imperative for you to actually, first of all, cover the universal standards and say that, I mean, these are the disclosures. These are the details, when it comes to compliance with the universal standard. So this is something which is applicable sector-wise to everybody, who basically adopts, let's say, GRI reporting. So this in turn is broken down into GRI 1, which basically speaks about the GRI requirements and the GRI principles that an entity is expected to use when it comes to ESG reporting. The next is the foundation disclosures of, let's say, the organization, basic disclosures about the organization. I think there are about close to 30 odd, let's say, about 30 odd disclosures which an organization is actually expected to actually, I mean, go through it, and they are supposed to report on this particular practice. Lastly, GRI 3 gives a very deep insight about, I mean, what material topics are actually all about. Now, we all know as accountants today that materiality for us, from an accounting point of view, has been ingrained in our blood and vein. But the way, let's say, materiality, what it actually implies from a ESG context is slightly different. I wouldn't say it is starkly different, but it is slightly different. Yeah, we will delve into a little more deeper on this particular aspect as well. Just a passing reference again on the sector standards and topic standards. As I told you earlier, these are basically relevant to every sector. eventually, at some point of time, GRI basically aims to get all the sectors under their gamut. As I told you earlier, today they have released for about 4 sectors, the fifth and the sixth sector, which I think financial services as well as textile and apparel will actually get released very soon. The other sectors are being worked upon at this point of time. As I told you, the whole thought process is that the sectors which have the maximum impact on the ESG side of things are the ones which are being picked up by GRI, and they are the ones which are getting released one after the other. Once you pick up, let's say, in one of these sectors, for every sector you have something called as a topic standard, which then very clearly details out that if you belong to financial services, what sort of topics are you supposed to actually report now. So each of these sector will have in turn about 200 to 250 line items, which in turn point or pontificate towards the data that is actually required for different set of reporting practices. So that is how the overall, let's say, GRI standards is actually structured. And just to summarize, you have the universal standards, which is applicable to all the organizations, irrespective of which sector you actually belong to. The sector standard, which is industry specific. At this point of time, I think oil and gas, number 11, number 12, number 13, number 14. I'm sorry, I actually missed out on numbering these sector standards. So this is basically GRI sector standard number 11, 12, 13, 14, which is basically oil and gas, agriculture, aquaculture, and fishing. Coal, mining are the ones which is already available. The ones under development right now is actually financial services as well as textile and apparel. And lastly, depending on which sector you're actually picking up, you basically then will have to report and actually identify what are the topics which actually belongs to which particular relevant sector. Yeah. I hope I'm clear until this point of time. And the benefits of, let's say, GRI standards is basically enhancing trust, improving decision making, having the stakeholder engagement very well defined, and aligning with multiple frameworks. Today, my experience tells me that when I started, let's say about a couple of years back, let's say in this particular industry as a sustainability enthusiast, I saw that, the regulations were still taking shape. People were speaking about, let's say, ESG, but it was like let's say about 5 or 10 years back, how you speak about AI, right? AI was actually very godly, something was never seen, but only felt, right? But then I think today, if you look at AI, I think everybody understands, what AI is. I mean, in fact, the fact that today, if you're sitting in your home and if Netflix is actually pushing notifications on your smartphones saying that hey, I mean, a recommended watch for you. I'm sure all of you would have seen this. The basic pretext of how that basically works is the fact that it matches your behavior pattern with a similar, let's say, user or a similar behavior with some other user, who actually exudes this particular behavior pattern, right? So then it actually cross matches and says that, because the other person watched something else, it then recommends this to a Kaushik and say that, why don't you watch this, right? Today, it is very simple for us to understand this because, I think day in and day out, we are using this, we are witnessing this. AI, in my opinion, has become, let's say, the way of life. I think it is around everywhere. So when I started, let's say, from a ESG or a sustainability point of view, things were still very murky, because there were a few regulations. GRI was obviously, let's say, the pioneer, I think way ahead in its curve in terms of, pushing the organizations. And over a period of, let's say, these 1.5, 2 years, what has actually happened is various regulatory bodies have actually, adopted ESG practices. They have started taking up, let's say, inferences from GRI, and they have started actually pushing organizations, entities, countries to actually start reporting this. In the last 2 years, I think you would have seen the push that has actually come out from all the, let's say, political leaders. In fact, even the current ongoing COP29, there is a huge emphasis on, let's say, what is going to happen from a sustainability point of view. And I'm sure, some of you, or in fact, all of you are actually following what is happening in the COP29 from an environment as well as from a human rights point of view, because mind you, ESG is not just about environment. Yeah, there is a huge implication on labor policy. There is a huge, let's say, ramification on if you misreport from the social side of, let's say, things. Yeah. So which is where the whole push is actually the social economic viability, as well as, the organizations making profit, out of their business. This is what, let's say, the whole crux of ESG is all about. Uh, Although all this while, I had a feeling that, it is all going to be really very regulatory driven. Yeah. But now I'm increasingly seeing that, there are quite a few organizations, in the geographies that we are actually operating today, where organizations want to take it up voluntarily. It is not a regulatory push anymore. Because I'm of a firm believer, having done a few, let's say, projects and implementations, and where the stakeholders, or let's say the owners, are actually starting to benefit out of, let's say, an ESG adoption for a continuous period of time. There will be a time very soon where, organizations will start reporting saying that, because of our ESG adoption, we have an increased profitability, or we have an increased, let's say, ROI per se, right? So that is where we are today, which is why it becomes absolutely important for us to actually understand the nuances around ESG reporting, and more specifically, let's say, framework driven, let's say, conversations. So which is where, today we are going to deep dive a little more on what, let's say, the universal standards mean. Somebody who actually comes and tells you that, there are universal standards, sector standards, and topic standards. But if you don't understand each of these nuances really well, some of you might be, let's say, practitioners already, right? And some of you want to take up, let's say, this as, let's say, a consulting profession, or your firm wants to, let's say, put up a, let's say, a separate practice of sorts, right? Focusing on, let's say, GRI based, assurance, audits, and assessments. If you don't understand this, obviously, just a certification is not going to help. And I think today, the landscape is still evolving, right? So which is why the basics of, when how, let's say, this gets defined, and how you are supposed to go about, or what exactly each of these nuances are, is what we are going to cover in the upcoming, let's say, 45 minutes to an hour of whatever is actually left. Yeah. So number one, when somebody speaks about universal standard, there are three components, as we saw earlier, right? So there is one, something called as a foundation layer, which is GRI 1. As you see on the screen, it basically gives you the quality and the quantity of, let's say, the reporting capability. It basically guides you how do you ensure that it helps you to protect the core concepts, the principles that you're actually expected to follow, and what sort of, let's say, requirements are expected out of organizations if you are, let's say, a GRI adopter of sorts. Yeah, so that's what, let's say, the foundation layer is all about. There is something called as GRI2, which is general disclosures. As the name suggests, there are about, 5 or 6, let's say, parameters like, organizational details, labor practices, your governance policies, the sustainability context itself, your reporting mechanisms, and other stuff. So there are, I think, very clearly laid out about 30 line items, or let's say 30 guidelines of sorts, which make up for what we today know as GRI2, general disclosures. Back when it had actually got released in the first, in the first release, or in the first instance, uh, I think there were close to about 58 to about 60 general disclosures. GRI over a period of time realized that, some of it is redundant, or some of them, they have actually, kind of, entwined and integrated that with, let's say, some of the existing ones. So that is how that 58 or 60 has actually come down to about 30 general disclosures of sorts today. Yeah. Finally, there is something called as, material topics. I'll cover this in a little more detail, but as the word suggests, material is, something which is significant, which is impactful, right? So from a sustainability context, it has a slightly different meaning from how, let's say, somebody who comes with a CA or a, let's say, financial mindset, the way we look at materiality is a little different, how, let's say, this basically works in a sustainability context. There is a very definitive mechanism of, how you are expected to follow something called as a materiality assessment, which basically forms the crux of, let's say, GRI 3, which is material topics 2021. Yeah. So simply put, the whole universal standards is basically a clubbing of GRI 1, 2, 3 is what you're seeing on the screen right now. And for the next 30 minutes or so, I'm going to deep dive into each of these. I'll try to make it as simple as possible, but then please bear with me. The topic is a little intricate. People who are actually logging in for the first time, without having a pretext of, what ESG is, what GRI is, you may have probably, some questions here and there, which I'm happy to take, let's say, at the end of the session. If not, I'll probably leave my email ID. You can reach out to Chindu. We can always, collaborate and answer your questions and queries, and ensure that, we are satisfying your queries with a good answer. Yeah. So the GRI 1 Foundation 2021 is basically broken down into the reporting requirements as well as the reporting principles. Now, both these terminology, again, for, let's say somebody like us, coming with the background that we have today, I don't think it is really very difficult for us to understand. There are a few, I think about 8 or 9, let's say, reporting requirements. There are about 8 or 9 reporting principles that every, let's say, adopter is supposed to ensure while, let's say, reporting. Because at the end of it, if you don't have these foundations or the basics in place, organizations are going to be at a loss, saying that, even if you just provide a line item saying that you have to report this, that is not going to be enough. The authenticity of it is what is going to be equally important, right? So which is where I think the reporting requirements as well as the reporting principles are absolutely going to be important. Let's deep dive a little bit on, first of all, on the GRI 1 Foundation Part 1, which is the reporting requirements. Yeah. Number 1, basic, it says that, apply all the reporting principles. The reporting principle is something which we're going to see in the next slide. Yeah. So it is not very, let's say, rocket science for us to understand that, the first reporting requirement is, you need to ensure all the reporting principles are well adopted, well understood, well inculcated, in your ESG reporting. Number 1. Number 2, disclose all the general information. Now, GRI basically has got GRI 2, which is the general disclosures. So all it says is that, when all required or mandatory, let's say, general disclosures are supposed to be complied with. That's what this particular requirement talks about. Identify the material topics. Now, again, it goes without saying that, if you don't follow a certain procedure when it comes to identifying a material topic in the ESG or in a GRI context, you are not complying with the GRI reporting. Yeah. You will understand this in a deeper context, when we cover this particular aspect in some more detailing, when we talk about identification of material topics. Disclose the management approach. How is that, let's say, the material topics, here, number 3, it said that, assess significant impacts and determine the material topics. Number 4 wants you to tell in the report that, how did you arrive at a material topic? Yeah, that's what this one says. Use applicable sector standards. Now, if there is a sector standard which is available, it is imperative that, you use that particular sector standards. You have no excuse or no recluse to say that, we don't want to use a certain sector standard, despite that being available at your disposal to actually use it. Today, I think a retail industry can say that, we don't have any sector standard. So, we are free to probably report, taking some guidelines of GRI reporting, using the universal standards, sector standards, and topic standards for other industries that serves as a guideline, right? So that will give you some logic saying that, how am I supposed to apply that for a retail industry? But today, an oil and gas cannot say that, because oil and gas GRI sector standard is very clearly, very beautifully elucidated, and they have very clearly given you a guideline how you are supposed to go about, reporting from a GRI perspective is actually concerned. So use the applicable sector standards if it is already available. Yeah. One of the nuances or one of the requirement over here is, see, on one side, I'm telling you that, there are sector standards, and the sector standards is broken down into, let's say, 200 line items or 200 topic standards. Now, will all 200 be applicable for an organization? The answer is no, right? Some of it may not be applicable. Some of it may be applicable. So where it is applicable, the onus is on the organization to collect data, record the data, convert it into ESG metrics, and ensure that the reporting is going on. Where, let's say, something is not applicable, yeah, the organization doesn't have to report, but they will have to state the reasons for omission. They can't simply, omit something which is applicable, right? So which is where the misinformation or the greenwashing comes into the picture. And I think in the last session, we had actually covered what a greenwashing is, right? Greenwashing is basically any misinformation or half reporting or no reporting. If you are expected to comply with something, you will have to report it as per the authorities, let's say, guidelines or the frameworks that you are actually adopting. That in effect is greenwashing. So something which is not applicable, you have the authority to omit it, but the onus is on the organization to provide a very clear reasoning. Why are you actually omitting this? Yeah, so that needs to be documented as a part of your reports. Yeah. Then comes something called as, we need to prepare a GRI content index. GRI content index is again a very beautiful table or a tabulated information which GRI has actually prescribed. Organizations which are actually adopting it, they need to very clearly come out tabulated. It's more of a table of content saying that, when how, let's say, an organization has gone about when it comes to preparing their GRI reporting. I have the ICICI report with me. Maybe after this, I'll quickly open that up. You will have a quick understanding of, what exactly this actually means. Yeah. Then you need to provide a statement of use. Basically, saying that, you have complied with the GRI standards, how you have gone about, what is the methodology, how, let's say, the perusal of this particular report needs to happen over a period of time and to the intended audiences. Lastly, this needs to go to GRI. Now, one of the mandate that GRI has got is, they have an email ID, where once the report is actually ready, once, let's say, some of the organizations today are reporting, in my opinion, without an assurance or without an audit. Yeah. Ideally, the best practice will be to ensure that, the assurance and audit is actually in place. And then basically it goes to GRI. Yeah. This is just off the, my opinion over here. But nevertheless, one of the key requirement of, let's say, GRI reporting is to send, let's say, your GRI report back to the GRI authorities, right? Now, I'm given to understand that, when GRI on a random basis will be, let's say, fact checking, auditing, let's say, these particular reports, but there is no clear mandate or any, let's say, specificity in this. But then, this is one of the reasons why it basically goes to them. And it also means that, some of the organizations who don't really resort to let's say, an assurance or an audit, there needs to be some amount of check, right? So in my opinion, GRI is doing the right thing over here by ensuring that, calling out the reports, because somebody who is using their, let's say, framework, I think they have all the authority to know and understand that, are you indeed following, let's say, what we are actually telling you to follow. So for that particular reasoning and for that particular purpose, this basically goes back to GRI over a email ID. Yeah. So I hope this is clear. This is again a documented list of 9 requirements which every organization is actually expected to follow, which basically forms the crux of GRI Foundation Part 1 reporting requirements as a part of universal standards. That is the chronology. Yeah. So I hope I'm clear in terms of, let's say, explaining, what exactly these 9 requirements are actually all about. Yeah. Moving on, we then move on to, something called as GRI Foundation Part 2 reporting principles. So what we saw earlier is basically the requirements, correct? So, and I believe, all of us do understand what is the distinction between a requirement and a principle. Requirement is something, which is expected for sure. Principle is something which is more of a guidance that you are supposed to use, while you, let's say, report on your ESG practices. And again, it is in my experience, this is one of the most beautiful, let's say, guidance, which GRI has actually given in terms of, understanding. And I think some of you who are the auditors over here might be already practicing this in terms of ESG audits I'm talking about. And some of it is also prevalent to your financial audits as well. So it will be easy for all of you to actually relate to what you're seeing on the screen. Yeah. Accuracy. I know it is easier said than done. Nothing in financial terms or when it comes to reporting can be accurate in today's times, right? I mean, I feel some of the organizations resort to a near approximate reporting, but that is not the case when it comes to ESG reporting, because if you recollect, one of the things which ESG or, let's say, GRI in fact prescribes is transparency, right? I mean, if you don't have, let's say, transparency in your way of reporting, everything is going to be a near, let's say, approximate value, right? So accuracy is one such principle to ensure reported information is precise and it's detailed for stakeholders. Yeah. Number 2, balance. There has to be an equal, how do I put this? An equal amount of balance in terms of having a positive or a negative impact. Now, to give you an example, now, one of the organizations might state that, we are positively, let's say, impacting the environment, by, let's say, having a reduced pollution or, let's say, CO2 emissions in our plant facility. But if their labor policy is actually against what, let's say, ESG practices are actually all about, they are having a situation where, one such business decisions is having a positive as well as a negative impact from a labor or a social point of view. So one aspect of, which contributes positively towards environment can always negatively impact another aspect of, let's say, the social or the people element. That is where the concept of, or the principle of, balance comes into the picture. Yeah. I hope I'm making sense and you're able to get, what I'm trying to say over here. Yeah. Clarity, provide easily understandable and accessible information. I mean, it goes without saying, right? Now, again, there cannot be any ambiguity. Ambiguous ESG reports will be not accepted. One from a GRI context, and again, I think as and when the assurance and audit keeps on getting, let's say, stronger, I believe this is a given that the reports need to be very clear and concise. Report in a manner that allows comparison over a period of time and with other organizations. So one of the things that all of us need to understand is ESG reporting is a continuous activity. Yeah. There cannot be a day where you say that, we have achieved it. No longer, we are actually expected to report on our ESG practices. That is not going to happen. And which also means that, let's say your report needs to be comparable in a competitive landscape. People need to understand, how this can be compared. At the same time, your stakeholders internally, your owners or internal stakeholders, external stakeholders, if somebody is accessing your ESG reports, should be able to compare this with your previous periods as well. That is where comparability comes into the picture. Yeah. Sorry. Completeness, because again, one of the key aspects is, the report needs to be concise and yet comprehensive. It needs to have, let's say, all the elements of, what you're actually expected to report. And that is exactly what GRI prescribes, right? From a universal sector and a topic standards. And all you have to do is, just follow step by step saying that, what is that we are expected to do. Some of the organizations might willfully also avoid, let's say, completeness because not everybody would love to have a balance on both, right? Typically, I mean, the biggest challenge today everybody is actually facing is, organizations want to report only on elements, which they feel that, they have had a positive impact, because, anything which is actually negative, obviously it is going to bring a reputational issue for them, right? And which is understandable. I mean, obviously we're all humans. Organizations are also run by humans at the end of it, right? So yeah, that is quite understandable. But then this is something that is actually expected as a guided principle, from a ESG or let's say from a GRI context. Very beautifully put. There is something called as a sustainability context, because you can't have, let's say, something getting reported just for the sake of it, without, if it doesn't reeks of the sustainability context itself. Why are you doing this in the first place? Because you're trying to prove that you are an organization who is cut above when it comes to sustainability or ESG context, correct? So if the report doesn't speak about it, and how does it speak about it? Not just by following what GRI says. If the business decisions are not, or let's say the business objectives and goals do not give an impression that they are well aligned with the ESG practices which the organization is trying to report through a ESG report or a ESG reporting process, things are not done, right? The organization is going to have an issue, which means you're not really complying with the reporting principle that you're talking about. Timeliness, needless to say, again, most of the reports are time bound, right? Today in India, I think BRSR is mandatory for the first 1,000 companies, correct? Now, it goes without saying that, if there is a listed company, I mean, who exists in the stock exchange, when their quarterly reports are getting actually published, today you see that, an ESG report is coming out as a part of, that particular reporting process. If the ESG report is not there, but there is a mandate, because BRSR or let's say SEBI is actually asking you to comply, you're not then complying with, one of the key principles over here. So timeliness is actually, again, one such, let's say, piece which, organizations need to be wary about. Verifiability, again, it goes back to the aspect of transparency. What is being reported, first of all, needs to be available in the public domain. Yeah. Most of the organizations today, if you see, are having all the, let's say, ESG reports available on their website, because, it needs to be available to the common man for their consumption. It is not like, a common man, suddenly, if I am actually very loyal to H&M, for example, or to, let's say, West Side, I don't need to go to Tata's and say that, I need this particular report, or I don't need to go to authority and say that, I need their ESG report. It doesn't work this way. This needs to be available for free consumption on their website, which also means that, the report needs to be verifiable. You can't, just publish something, because if you publish something which has got no nexus to the actuality, or let's say the reality, again, it's a classic case of, let's say, hogwash, which then amounts to greenwash, green rinsing, green crowding, I mean, all those concepts. And mind you, increasingly, again, I'm seeing this, the fact that Europe is leading the way, when it comes to, let's say, ESG reporting. And that is primarily understandable because GRI is headquartered over there. Now they are coming out with something called as a CSRD, which is a corporate sustainability reporting directive. Now, the ramifications of not following your ESG practices is the fact that, if you are caught doing greenwashing, or if you are caught off guard, doing some practice, which on the outside, amounts to becoming a greenwashing of sorts, there are consequences now. Yeah. And I feel that, I mean, increasingly this will get adopted in the other geographies also. India, again, not being very far, because, India is quickly adopting to, let's say, these policies. Honestly, last year, I never thought that, India will be this ahead when it comes to ESG. I was a little surprised, when last year we got a notification saying that, the top 500 companies are expected to, let's say, follow BRSR and start reporting their ESG practices. This year, it is 1,000 companies. So which means it very clearly follows that cyclical or the circular economy, where it is actually trying, I mean, let's say one customer who is expected to actually report on their ESG practices is now pushing its vendors, is now pushing its own customers to adopt ESG practices. That's what is happening in reality, right? And that is what will happen in the next 3 to 5 years. And that is where, let's say, there are business opportunities as well for all you. Since when I say business opportunities, one from, I mean, some of you might be practitioners, who want to take up this as the, let's say, an audit assurance division of your own. Some of you may be sustainability enthusiasts who may want to, let's say, change or switch your career path onto this particular area, right? So there are opportunities for everybody. By business opportunities, I don't mean only from an enterprise or a company or a partnership firm point of view. Yeah. So simply put, I think the general disclosures, I think we have covered it in, let's say, detail. I'll quickly run. Otherwise, I think we may not really get time to actually cover the other nuances because we are almost 45 minutes down. Okay. I just also wanted to touch upon, let's say, what the general disclosures are actually all about, right? So GRI 2 basically speaks about, let's say, what the general disclosure standard is all about. I think I should not have. Yeah. So the GRI 2 General Disclosures 2021 speaks about, let's say, the governance structure, the policies and the due diligence, that an organization is supposed to actually embark and take into consideration. Finally, it also speaks about the stakeholder engagement. We will see all of this, in the upcoming slide in a little more detail. Yeah. Number one, there is something called as organization details broken down into 2-1, 2-2, 2-3. All you see over here are very basic information of, let's say, what the organization is all about, right? Sometime back, you would have heard me saying that, some of the disclosures, some organizations can actually state or say that, it is not applicable, or they can omit. But they have to state the reasons for omission. But this particular section, number one, which is organizational details, there cannot be any omission. You will have to actually, mandatorily report. You will have to mandatorily disclose, in each of these line items in this particular order, in this particular, let's say, subtopic number that is actually stated over here. The second one is, let's say, the activities and workers, which slightly actually borders onto, let's say, the social side of things. Yeah. So activity, things like, what is the value chain looking like? What are your other business relationship? This is where, let's say, today, if you follow ESG practices very closely, there is this supply chain, let's say, sustainability conversation, which is picking up steam, right? There is this vendor management, which is again picking up steam, saying that customers today, want to know what the vendor is actually doing from a sustainability context. What is their business practices? There are quite a few large organizations today who are actually reaching out to us saying that we have started losing, let's say, large deals from our existing, or let's say, a new prospect or a customer, because we don't have anything to talk about when it comes to ESG. There is no way that we can actually justify and say that, this is what we are doing from an ESG context. Yeah. So which is where, the organizations are actually expected to report all of these. The employees, workers who are not employees, some ancillaries, needs to be reported. A huge bunch of list, when it comes to the governance side of things. Like what is your board composition? What is your, let's say, the age. When I say age, how long, let's say, they have been, let's say, assuming this particular role. Are there any conflicts of interest? Because, this again becomes a huge bone of contention, right? And this typically, if you see, till the time the ESG practices came into the picture, this reporting was not really a mandate, although, there were, let's say, few accounting standards and few disclosures, which was always available from one or the other area. But some of the cases it wasn't, right? So which is where I think the ESG standards are now picking up steam, and they are now taking this into consideration and ensuring that, the reporting is going in the right direction. Communication of critical concerns. This I think might be prevalent in the case of, let's say, large organizations, family-run businesses, where if it is a publicly listed company, Reliance is expected to actually disclose this information with a lot more zeal and a lot more, let's say, enthusiasm. Then comes, let's say, structure 4 within GRI 2, which talks about the strategies, policies, and practices when it comes to the sustainable development strategy. What is your policy commitment when it comes to ESG, sustainability, your human rights in particular? Because uh, some of the organizations, before, let's say, rigid frameworks came into existence, for them, ESG was always about, let's say, uh, what the environment looks like, or what, let's say, their contribution towards environment is actually all about. But now I think we are getting to know, and we are aware about the fact that, ESG is a little beyond environment. ESG, I think if you look back to the UN Sustainable Development Goals, about 60% of SDGs are centric towards human rights. So the onus is on the organization today, even as per GRI 2, to prove that, you have enough in your armory to ensure that, the human rights are protected. There are policy, there are commitment, there are racism policies in place. There are no discriminations, for example. There is no gender parity of, or if there is a gender parity, there needs to be an intent or a reasoning behind, why there is a gender parity in the first place, so on and so forth, right? And then, some of it, maybe, when I share the slides with you, you can actually go through it in detail. Lastly, there is also, let's say, an element of, stakeholder engagement. That is how the overall 30 line items are actually made up of when it comes to the general disclosures standard. At this point, I would love to take you to, one second, let me just see if I have that, the ICI report, because again, last time also had actually projected that, if I'm not mistaken, but it will give you a very clear, let's say, understanding of, how things actually look like. Chindabam, let me know if you're able to see my screen, yeah? Because sometimes it doesn't swap.
Yeah, now it's visible.
You can see the GRI index.
Yes, index.
Okay.
Yeah.
So, ladies and gentlemen, what I have done basically is I've just gone to the ICICI website. There is this section. I'm sure some of you would have known this already. There is this index section, where you have this particular option saying that, download the sustainable. They have a very beautiful, let's say, section for sustainability itself. All of the section that you see over here is for, let's say, ESG. You can go download this particular report, take a look at, what the chairman is actually talking about. They also have given, let's say, nuances of, how, let's say, the ESG report is actually structured. What are the focus areas of their ESG policies? Very beautifully done, in my opinion. Yeah. Then you can download this particular report. Once you go into this particular report, there is, I think, page number 75. After having disclosed about all of it, they have given a very clear guideline of saying that, GRI standard, General Disclosures 2021, disclosure number. This is exactly what we saw sometime back in our slides. What they have done over here, I'm just digressing a little bit, but I think this will give you a little more context. What they have done over here is they are a company based in India. So obviously, they will have to report from a BRSR point of view, being a listed organization, right? Mandated by SEBI, right? At the end of it. So all of their report speaks about, let's say, BRSR. But what they have done very beautifully over here is giving a GRI index giving the whole disclosure numbers and saying that, where is it, let's say, relevant or prevalent, and which page number they have actually disclosed this. So this is how beautifully they have aligned both the frameworks. Why should ICICI Bank, take up, let's say, GRI? Mind you, they have a global visibility, right? They exist in multiple organizations. Nobody had to go and tell them that, you report because you exist in India, you only report on BRSR. But somebody looking at them from a global point of view, let's say even an NRI, who is, let's say, been seated in America or Dubai, for example, uh, they wouldn't understand a thing about BRSR, right? But the moment you talk about GRI is a little more global. So what they have done over here is beautifully complying with the laws of the land over here when it comes to BRSR. And they are actually also complying with, let's say what GRI basically speaks about. So they have disclosed all of it. You can go through it at leisure, go to their website and, take a look. It gives you the complete nuances of, what we actually discussed some time back. Yeah. I hope that helps. I'll just quickly jump to the slide again. Sorry. Sindhu ma'am, again, I'm sorry to disturb you, but you're able to see my screen, right?
Yes.
Okay. The pace is okay. We have time, right?
Yes, sir, we have time.
Okay, cool. Sounds good. So the GRI 2, in summary, I just thought that, I'll just put this particular slide, so that you understand the context in a little more detail. We saw there were organizational details. We address, what sort of organization is all about, the regional existence, what do they do, what do they do not do, what are the policies and other stuff, right? We saw a huge list of, let's say, governance related issues, right? Saying that, the conflicts of interest, board composition, policies and procedures, what sort of, let's say, mechanisms do you have to prove that you are an organization when it comes to saying that, you're very high from a governance point of view. What sort of strategy or policies do you have? What sort of sustainability context itself? Let's say, are you here to actually prove and talk about what policies and practices, again, more from a, let's say, labor policies, workmanship, environment policies. So all those, is actually, something which is actually expected from that particular reporting framework. Stakeholder engagement. We're going to talk about it in a little more detail. I know I have been saying this quite often, but I think we are slowly getting there, where we speak about the stakeholder engagement in a little more detail. And lastly, it also needs to, speak about the reporting practices. So that, in a nutshell, is basically what, let's say, your GRI 2 is actually all about. So just to summarize, what did we see in GRI 1 is the fact that GRI 1 itself is broken down into two parts. You have the requirements, you have the principles. The GRI requirements is broken down into 8. The GRI principles is broken down into 9. And organizations are expected to follow those, when they are actually reporting it. GRI 2 very specifically, tangibly lists out, saying that, what is that you're supposed to, let's say, list. I'll just go back just for posterity. It very beautifully lists out, saying that, what are the organizational details, what are the activities and worker details, what sort of governance is actually in place, what sort of policies and procedures from a strategy point of view, and what sort of stakeholder engagement is what we have. We also saw how, let's say, the general disclosures are being, let's say, well interweaved or well interwoven in their ESG reporting from a Indian organization or an Indian context point of view through the ICICI Bank report. There are a few other, let's say, I think Tata Steel report is again another one. In fact, it completely slipped my mind. I should have probably, done that as well. But I would urge all of you to take a look at their report. Even Mahindra has done a very, decent job in terms of, how they go about, let's say, the GRI disclosures and how it is getting ingrained onto the BRSR scheme of things. Because I think being in India, obviously, although we are trying to learn about GRI, we also need to have a view on, how this basically embeds or how does it well complements, let's say, the BRSR scheme of things, right? So that is where I'm harping a little, and I'm kind of digressing, from GRI when I keep speaking about BRSR. Yeah. So I hope at least we are clear in terms of, what, let's say, we have seen till now, and I hope this has been actually helpful to all of you. Which now gets us to, let's say, GRI 3, which is the material topics 2021. Before this particular slide, I want to emphasize on how GRI looks at it. Yeah. The GRI definition for material topics, it says that, and I quote, topics that represent an organization's most significant impacts on the economy, environment, people, including the impact on the human rights. The definition is loaded, right? As I told you, and I keep telling you, most of the organizations, the moment you speak about, let's say, on ESG or sustainability, they only take into consideration the environment side of things. That is not the case. And within that also, they only report on the practices or the decisions uh, which positively impacts the environment, right? Which should not be the case, right? And I again know it is easier said than done. It is not, let's say, when as easy as it sounds over here, running an organization is not an easy job. And plus, if you have to report something which you are negatively, let's say, impacting one way or the other, I mean, obviously it takes guts to actually do that, right? But now I think, with all these frameworks, they are slowly trying to push the organizations, through guidelines. And I think the law and the legal authorities now are also working overtime to, come out with consequences and say that, what if, you're misreporting? Yeah, so that is where it is actually. So the eventually, let's say, when we speak about material topics from a GRI context, we say they encompass all relevant topics for the organization and its stakeholders. So one key thing over here is it speaks about the most significant impacts. Again, in invisible brackets, you need to read this as positive and negative. Yeah, all your, let's say, actual and potential, let's say, impacts need to be considered, when you actually report this, right? That is where, if you recollect in the GRI1 Foundation, when we spoke about the principles, we speak about the fact that, what you're reporting is actually transparent, verifiable, and it is something, uh, which you can quantify and say that, this indeed is what is actually happening in our organization, and say that, but even if it is negatively impacting, you need to report that. Now, if you dissect this particular definition of, let's say, what GRI says from a material topics point of view, it speaks about significant impact. Now, that significant impact needs to be or should be both actual as well as potential, right? It is not, when I talk about potential, I'm talking about something which you anticipate. It is like your contingent liability, right? What we qualify in our balance sheet, saying that, we expect a litigation to actually come up, thanks to, I mean, some of our misdeeds that we have done, for example, right? So that is a significant impact to the business. So very similarly, from a GRI reporting point of view, in the ESG context, this basically talks about significant impacts, which is both actual as well as potential, right? It needs to, again, reek of stakeholders. There has to be a huge element of, stakeholders in this particular business. Let me now tell you, what exactly a stakeholder means in a GRI context from a materiality point of view. Materiality, I think by now you would have understood that, any of your business decision which is impacting internally or externally, yeah, internally within the organization, externally to others who are connected or concerned with your business. Any such decision which impacts positively or negatively is a material topic, is a material impact. Yeah. Now, the stakeholder in an ESG context is a very, very important definition. A stakeholder internally, I mean, I'm sure all of us know, like, I mean, whoever is concerned internally, it can be your stakeholders, your chairman, your department people, all the co-workers on the payroll, all the people, who are casual laborers, for example. They're also stakeholders at the end of it, because they're working for you at the end of it. In fact, it also, means, all the again, I'm not trying to demean, but let's say the lowest value chain in the the organogram, which is your housekeeping, for example, right? Even the sweepers, the cleaners, even you need to prove that you have had a say of theirs also in this particular whole journey. So a stakeholder, number one, internally is all of these. Externally, anybody who gets impacted because of your existence as an organization. It can be the bankers, your vendors, your business partners, your channel partners, customers. Yeah, anybody and everybody who's getting impacted, because of your existence as a business is a stakeholder. And from an ESG context, all of this put together becomes stakeholders, and all of these stakeholders together need to then drive the ESG material topic conversation. So it is not something, let's say, a chairman or a CEO or a managing director can decide that, for this particular quarter, we are going to reduce our emissions by 10%. It is a great material statement. It is a great, let's say, objective, let's say, for this particular quarter. But that organization cannot just, drive their ESG practices or ESG reporting based on this one particular statement. The onus is on the organization to prove that there has been a materiality assessment, there has been an inclusivity of all the stakeholders put together, and they have now decided that together this is a significant impact for the organization, which is a positive impact, right? And there is a very definitive process of how this needs to be done, which is what we call as the materiality assessment. I'll cover it in a little more detail in the next slide. I hope I'm making sense. Till now, I'm happy to take questions. Please park it for the time being. At the end of it, we'll take the questions and answer it. And there is a question, I believe. Anyways, I'll take it towards the end of it, ladies and gents, if you don't mind. This is where, let's say, the expectation and the interest, both of the stakeholders are actually concerned and are taken into consideration. There is something called as impact-based approach. Now, once you know that, this is the impact, you'll have to then see to it that, what sort of approach, what sort of, let's say, corrective measures, what sort of preempting of, let's say, things that you are supposed to do from a strategy point of view needs to be taken into consideration. A further dissection of that particular definition would also tell you that, the focus, a very heavy focus, is actually on the human rights. Most of the frameworks, I don't want to call out any one specific framework, but most of the frameworks, if you see, are centric towards the environment side of things. GRI is one such, let's say, framework, which is very holistic, very comprehensive, covers the entire gamut of, let's say, the triple P theory. The triple P theory, again, what it means is, what does an organization do to earn profits? By way of proving that it is positively or negatively impacting the planet and the people. That is basically the crux of, let's say, what ESG is actually all about, right? Which is where the social side of things cannot be overlooked. And that is exactly where, the GRI definition focuses very clearly. Although if you look at the earlier definition over here, it says topics that represent an organization's most significant impacts on economy. When it says economy, it's talking about the G of governance, right? When it speaks about environment, it is talking about the E as in the environment of ESG. When it talks about people, it is talking about the S of the social, or let's say the ESG side of things. But it emphasizes saying that including the impact on their human rights. They could have left this particular, let's say, 5 words out of it and ended with people itself. But they didn't do that because they realized that, quite a few frameworks are very centric towards the environment scheme of things. They're only focusing either environment and the governance side of things with a very little, let's say, touch points, or let's say tangency towards, let's say, how you look at, the social or the people side of things from an ESG context, which is why this needs to be understood in a little more deeper context. And this is one very reason, or one such, how do I say, let's say, the key driver. If you look at the GRI, let's say the whole curriculum, it very clearly also talks about, let's say, the linkages between the GRI framework as well as the SDG specifically. It also has another line item which says GRI unified with human rights. So there is a separate module. If you take up, let's say, the GRI certification, you will see this as a separate module, which has got a huge, let's say, curriculum on its own. So which is why the emphasis is very high in this particular definition, and it is kind of loaded with the aspect that, it needs to be focused and centric towards the human rights and the people scheme of things. Lastly, of course, it comes on to the prioritization, because, even once you understand what materiality, or let's say materiality assessment, is actually all about, you will get to know this particular word in a little more deeper. I'll probably cover it, this particular word itself, once we finish off that particular slide. Yeah. Now, as I said, the GRI 3 very specifically says that, an organization has to put together material topics, right? But how do you put it? How do you come out with a material topic? Now, today, most of the ESG projects or ESG reporting starts with what we call as the materiality assessment. The other ancillaries that you saw, GRI 1, 2, they come later, because this in effect sets the tone for the ESG engagement itself. Because organizations today, they don't know how to start, where to start. I mean, how is it only data collection? Okay, fine. We have GRI 1 and GRI 2. We have very clearly given out about 30 line items that we are expected to report, but that is not it, right? I told you this is only universal standards. Then you have something called as sector standards. Depending on which industry you belong to, there are other topics that you are expected to report very clearly, which means there is a complete granularity which is actually involved at a later stage. Today, right now, what we are looking is only one aspect of, let's say, the GRI content index, which is your, let's say, GRI universal standards, right? So very specifically, the first step that an organization embarks on a, let's say, an ESG strategy is something called as, let's say, materiality assessment. Very first, it basically involves definitions of your the overall scope and the overall objective. Identify your stakeholders. Yeah, and this means internal stakeholders and representatives from the external stakeholders. I know quite a few organizations today who have started writing, our own customers. They have started writing to us saying that, hey, Kaushik, we are actually in the process of, conducting a materiality assessment, and we would be glad to have your inputs for the following set of questionnaires. Yeah, this is exactly a materiality assessment process, because my say is important for them, because they're dealing with me as a vendor for my automation tools and my services, right? So that is what, and that is why, let's say, the stakeholder conversation becomes absolutely important in the GRI context of things from a materiality point of view. Gather the inputs. I mean, once you identify the stakeholders, you take their, let's say, responses from them. I told you that our customer has actually reached out to me. There is an email, there is a set of questionnaire which is getting flashed at me, about 10 to 20 questions, which I'm actually expected to answer from a business context of things. Some of it pertains to me, some of it pertains to their own business. In fact, if you ask me, about 75% of the questions is very beautifully drafted, which will give them my, let's say, opinion about their organization, which is environment, social, and the governance side of things. Wherever I have an access or I have a view as a supplier. Yeah. So that is where gathering input comes into the picture, where the organization is seeking my inputs in their, let's say, scheme of things. Once, let's say, all the let's say questionnaires are actually responded to, once I have the complete set of information back from all the respondents, what I then do is I collate all this information and try to identify and say that what are the key ESG topics that I need to actually focus on. Because by doing this, the organization is proving they have a 360 inclusivity theory which they have actually pushed, and they have proved that they have actually done, because all this needs to be documented. This is not something that they pick up the phone and say that okay, fine, please let me know where exactly or how exactly am I supposed to go about this, and then we publish this on a piece of Excel. No, this is not going to work that way. So there has to be a very clear audit trail. The whole materiality assessment as a process needs to be auditable, needs to be verifiable from an audit assessment point of view. Yeah. Assess the impact and the importance, because again, the onus internally lies with the organization to see to it that what is actually necessarily impactful. Some of the organizations, they say that the external input that we have got is far more important for us than the priorities that we need to take internally. That is exactly why, let's say, this whole materiality assessment as a process is actually followed. Prioritize the topics. You may not be able to cover everything, but you may say that these are the top 5 line items that we need to focus on, and let us actually prioritize these topics today. Validate the findings, because again, somebody just responds for the sake of it. It doesn't really help at the end of it, right? I mean, once you have, let's say, responses from all the organizations, all the stakeholders, you kind of weigh in and say that I mean, and have a balanced view of things, how exactly, let's say, the responses have actually come in. Documentation of process, which we, I think, spoke about. Integrate this into strategy, because see, I kept saying this, you just following this reporting for the sake of it is not going to be of any help. At the end of it, the ESG report, as well as, let's say, your practices, needs to go in tandem. Understandable that it cannot be 100%, but at the end of it, somewhere a layman or a common man or any employee or any stakeholder needs to get a feel that they're walking the talk. You can't have something, you're just reporting for the sake of it, which again is a hogwash, amounts to greenwash, accounts to legal consequences. In some point of time, you will have, huge monetary compensation, or let's say compensation to actually pay to the authorities. Review and update periodically. Unfortunately, I'll now tell you the reality. Not many organizations are even embarking on this particular journey of materiality assessment because it is a very cumbersome process. But some of the organizations, now I'm just telling you from my, let's say, experience, where we are dealing with, let's say, some of the large organizations. Some of the organizations are indeed doing it, as I told you, because I wasn't creating a story. There are indeed, let's say, at least one or two organizations who have started, sending out those questionnaires to me, saying that, you as a representative of your organization and as a esteemed value or a service provider to our organization, please explain, or give us the responses. What is your opinion? Because your opinion matters. And why it matters? Because GRI says so. The materiality assessment needs to have inclusivity. There needs to be involvement of stakeholders. The process needs to be documented. The responses have to be collated. The responses need to be documented. The responses then need to be given weightages. And then finally, you say that, based on the materiality assessment, now the CEO says that, based on all the responses that we have received, XY, which is our organization, now is actually aiming to reduce our carbon emissions by 10%. Now it is a very logically driven organization, thanks to a process which has been defined by a framework called GRI. Yeah. So this is what materiality assessment as a process is actually all about. Yeah. I think with that, we finished the first topic. We have three or four more topics that we have to cover, and I'm hoping I should be able to finish it in the next 25 minutes, so that the last 15 minutes we are able to open up a session for the questions. Just for summary, GRI 1 sets the principles and the framework very beautifully. Very beautifully, it actually gives you the guidance for a good qualitative report. How are you supposed to come out with the qualitative report is what that basically tells you. GRI 2 ensures that the organizations provide essential general information about their structure and practices. We saw organization details, policies about the people, strategies, your materiality assessment process. All those is actually summed under GRI 2. GRI 3 very specifically focuses about managing the material topics and sees to it that, how it is then finally connected with the topic standards in detail. Yeah. The next topic is, yeah. Moving on, which I think the next topic, which is actually important for all of us to understand, is how the universal standards now start interacting with the topic standards. Just for all of your understanding, the whole, let's say, GRI reporting is broken down into universal standards, sector standards, and topic standards. Yeah. One of the topics that we took up for today's session was that, now that you understand the GRI standards or universal standards are made up of GRI 1, which is your foundation layer, GRI 2, which is general disclosures, GRI 3, which is your material topics, correct? Now, the other thing that you all will have to know is, how does a universal standard then relate to a topic standard? That's what we are trying to actually, prove over here. Now, the universal standard provide you a very clear context, give you, let's say, guidance towards, let's say, the governance side of things, the materiality side of things. The topic standards give you line items. It would be like, as I told you some time back, the board composition, your gender parity, yeah, your emission related policies. In fact, specifically, no, emission policy comes under let's say, the general disclosures. Very specifically, what sort of emissions are you emitting? Let's say scope 1 and scope 2 and scope 3 emissions, for example. What is that which is actually happening? What is that you're doing for it? That becomes a topic. Similarly, there are about 150 to 200 topics depending on which industry you actually relate to. In this slide, we are trying to see that, how a universal standard then merges, or how does it actually integrate with the topic standards. Yeah. Now, the interaction basically is, you would have by now understood in the earlier slide that, the material topic when you ask me a question very specifically, I'm going to give you my specific experience, which means I'm going to give you a very detailed, let's say, response. One of the responses which I told that particular customer was the fact that they keep calling you for, let's say, a lot of in-person meetings. Yeah. In today's day and time, I believe that, on one side, if you're speaking about sustainability, and on the other side, if you expect me to, like, step out, take my car, come to your premises, um, I park my car, get into your office. You then take me to a meeting room. In the meeting room, where the lights were actually switched off, you switch on the lights, get me into that particular table. We speak for about, an hour or two. None of it really convinces me that, why we are actually sitting in person and actually discussing this. This could have happened, let's say over a Teams meeting, similar to what we are doing over here, correct? Because on one side, the avoidable travel is becoming a huge problem today, right? You would have seen a lot of airlines today have started publishing, what sort of CO2 emissions that, let's say per seat is actually emitting. Indigo does it, Emirates does it, and there are a few others, which I have seen sporadically who have started doing this. This is because, the organizations have started to, and they need to report on, let's say, their scope 3 emissions, right? So this was one of my responses to them, saying that, if you would not have done this, I quantified and said that, you would have saved, let's say, an X amount of carbon credits, if we would have had, let's say, these many meetings online. I mean, he just had a chuckle, and we just spoke after that. So the crux of the matter is that, when aspects like these, right? So this is a very classic response where I have granulated it down and said that, you could have avoided, and this is the line item where your CO2, and you have made me, let's say, the victim over here. In fact, I'm the culprit over here, where you're making me to, be a contributor to the environment, from a CO2 and a methane gas emission point of view, right? So that is how, let's say, the interaction or the integration between a universal standard and a topic standard basically happens, where the universal standard says that, material topics have to be defined. It also says that, you need to have a stakeholder inclusivity. It defines a very clear process on how you're supposed to go about it. And when you give out an actual data with respect to any of the material topic, like an emission, for example, that is how, let's say, the integration basically happens. So the universal standards today provide the foundation for the sustainability reporting, focusing on the context, the governance, and the materiality side of things, and they also guide the topic standards. So just because, these are three, or let's say a universal standard being separate and a topic standard being separate, doesn't mean they don't talk to each other. They talk very clearly. In fact, they give you a very specific line item, which has got, again, a linkages back to universal standards. Some of the large organizations have started reporting this, saying that, how a topic is actually relevant or prevalent to the universal standards that is actually getting disclosed. So in summary, the key interaction is the materiality defined by universal standards defines the relevance of the topic standard. There is no topic standard unless and until the chapter itself is actually defined. Like, for example, today, if you are talking about environment, emission has to be a subtopic for sure. You talk about environment and not talk about emission, but talk about labor policies, it is not correlating at all. It is not relating. That is how integrated they are. Universal standards provide the context as well as the boundary, but the topic standard give you specificity in terms of, what they need to actually speak about. Together, they ensure comprehensive and relevance, which I think by now, I'm sure you would have actually understood that particular bit. And why it is important is, the reporting needs to be holistic, needs to be comprehensive. It again goes back to the whole policies of, or principles of, let's say, GRI, when it comes to transparency, consistency, accuracy, verifiability, because at the end of it, it is all about data. If you don't have enough data, you don't have, let's say, the ESG journey complete at all. Yeah. So which is where I think, this slide aims to prove, and it is not a very rocket science. In fact, when this particular, let's say, topic which we are trying to address over here, all you need to understand is there is a very clear linkages between universal standard, sector standard, and topic standard. Sector standard, of course, it actually broadly just gives you, let's say, what we call as the linkages, or let's say the chapter specific for every sector. But the topic standard gives you very detailed of, let's say, what every organization is supposed to report, which again goes and actually, links back to the universal standards scheme of things. Yeah. Moving on, the other topic that I was expected to actually talk about is actually the fact that the key update in GRI 2021 revisions, because as I told you, every uh, every organization, what basically happens is it needs to evolve over a period of time, and GRI is actually again no different, right? So you have, let's say, the first topic which we speak about, something called as the structural changes to the universal standards, which in turn speaks about uh, over a period of time, this is kind of evolved. I mean, if you go back in time and take a look at the initial releases which actually came out of, let's say, GRI, it was a little, I wouldn't say haphazard, but I think there were quite a few nuances which were still left at the disposal of, let's say, the reader or the audience who is consuming it. But now what has happened is, over a period of time with, let's say, I mean, enormous adoption of GRI standards, things are actually evolving. Now you are seeing there are a lot of updates, which is actually happening. Even now we are still speaking about GRI 2021, and I'm given to understand that come 2025, there is a new set of revisions which is actually expected to actually come in. I think I mentioned some time ago that the universal standard GRI2 general disclosures initially were made up of about 56 line items, 56 disclosures. Some of it over a period of time became kind of redundant, and some of it what they did over a period of time was to ingrain it with other general disclosures that they already have, which is where now you have a reduced line item, which is almost halved to about 30 at this point of time, which I think we saw some time back in our slides. A revised approach to materiality, the whole process which I explained about materiality assessment uh, is actually something which is evolved now, yeah, in the recent revisions. So the whole focus is actually on impact-based materiality, enhanced guidance on user due diligence, as well as stakeholder engagement. Stakeholder engagement is becoming a very, very crucial, let's say, norm or a crucial thing for the whole ESG reporting from a GRI context point of view. Needless to say, I think by now you would have known there is a huge, let's say, emphasis on human rights and due diligence in line with the UNGP as well as the OECD guidelines. There are mandatory reporting, there are continuous guidelines which is actually coming in, which organizations are specifically expected to report on the human rights side of things, which is where the GRI definition itself, I think that addition of human rights is again an evolution over a period of time. Yeah. Um, there were a couple of words which were actually used earlier called as the core as well as the comprehensive scheme of things, but now I think wherever you see, even if you would have seen the GRI content index or the GRI index of ICSA report, it says in accordance. Now we know that in, let's say, in all these audit and reporting requirement language, the words are so important. When you talk about something which is in line, which is in accordance with, has got a different meaning to saying as per, right? So which is where I think now the emphasis is more on the usage of the words called in accordance with, let's say, the GRI content index or the GRI standards. Introduction of sector standards, as I said, initially this was a little vague. I think it was all left to, let's say, every organization, every sector, every organization to use their own rationale and say that how they are supposed to go about when it comes to the ESG scheme of things. But now the good thing is about 4 sectors are already available, as I told you, again to reiterate, today 11, 12, 13 and 14, which is uh, oil and gas, fishing, aquaculture and agriculture, I think mining, I'm actually missing another one. And there are a couple of other, let's say, sectors which are getting, let's say, done right now, which is the financial services as well as the textile and apparel industry. Because as I told you, the whole focus is on the sectors which have maximum impact on the ESG side of things are being prioritized at this point of time, and this continuously are getting added over a period of time. I think, you ESG practitioners or let's say ESG wannabes, you can pick up, let's say, any sector which you want to specialize in, have a thorough understanding of, all those sectors and ensure that, you either become the auditors or the consultants for that particular industry. And you can guide organizations, based on what GRI speaks about. Today, in fact, GRI also offers sector specific certifications as well. So if you are a, let's say somebody who wants to assess, who wants to take up, just give me a second. I'll just, sorry about that. Yeah, somebody who wants to, let's say, take up this as a consulting project, somebody who wants to take up consulting as a, let's say, profession, or an audit as a profession, you can over a period of time, start having nuances around the industries for which, let's say, the sector standards are available, and take up and enact the respective role that you actually all want to. Uh, I think by now, this line item is pretty clear. What does it mean for the reporting entities? Now, one of the things, why reporting entities have to actually take up a certain framework, it all goes back to that, right? I mean, if you understand the principles and requirements by now, I mean, it is not very away from why, let's say, ESG reporting is required in the first place, right? So from an implication point of view, what it means by adoption of, let's say, whatever you have seen over here. One is, let's say, you are being very transparent, you're trying to be consistent, you're ensuring all the principles are actually met. The fact that you are adopting a certain framework also means that you are actually serious about things. You want to be, let's say, noticed in a global visibility or in a global forum point of view. You want to be aligned with, let's say, what the competitive landscape looks like. Today, if a Pepsi is actually doing it, but if a Coke is not doing it, that is not going to happen. At some point of time, the competitive landscape is going to push both the competitors and ensure that, they are actually, driving their ESG practices in their own perspective, but in the right context of things, right? And with the sector specific, let's say, reporting coming into the picture, now things have got a lot more easier for organizations to pick up and say that, what sector I belong to. And even if a sector is not available today, what is happening is, in fact, I'll give you one of the experiences very recently. Now, oil and gas, the sector standards are already available, topic standards are already available. Now, we had a, let's say, challenge in terms of, let's say, a certain industry which was very close to, let's say, how oil and gas basically functions, right? So what we did basically was, they had to report as per, let's say, their ESG practices, because, there was a regulatory push. Now, they were not sure what framework to adopt, and when we recommended this to them, they were not convinced. But a deeper, let's say, going through of, let's say, the oil, what the oil and gas looks like from a line item reporting point of view, it kind of convinced them. So today there are quite a few, let's say, sector standards already available, which organizations can pick up, take a look at, and see that, how logically that can be then applied to your scheme of things, just by saying to really help any organization. Yeah. Moving on, this is a little loaded, but I think I'll quickly run through in the interest of time. Now, this is again based on, let's say, my experience as, let's say, how we are actually working as a ESG consultant. Now, some of the common pitfalls that we have seen typically with organizations today is, number one, this thing is, as I told you earlier, also a lack of materiality assessment. It is not done, because if you don't do it, you're not really following what the framework is asking you to do. You following about 10%, 15% of the framework related things, but not following the others is not going to really help. Yeah. At this point of time, unfortunately, the legal consequences are not really very intense or intricate. So which is why organizations are getting away from not following, let's say, this particular practice, but over a period of time, you will have to do it. So how do you do it? The whole this thing is to conduct materiality assessment pretty regularly, pretty intently, and pretty intensely, right? Second most common thing which we have seen is, inconsistent or incomplete disclosures. Now, this again, it might be voluntary also, or it might be an oversight. We don't know at this point of time, and we don't want to comment, or that is not right from our perspective. But we are seeing that, increasingly this is becoming a trend. How do you, let's say, avoid this? You basically have a checklist, have an automated process, ensure that you are learning from your previous mistakes or something that you have done in the past, or have a competitive view of things. There is always somebody who's a little high in the value chain, right? There is no harm in actually learning from them, taking the nuances, and ensuring you're actually, inculcating in your ESG practices. Overlooking contextual disclosures, just doing it for the sake of it is not going to help. GRI 2 very clearly elucidates. And I don't think, if you give this checklist to a newborn baby or let's say a baby who started going to a school, rather he or she will be able to take it up because it is very clearly drafted. What is the expectations over here? Now, intently overlooking it is not going to be of any help. And I think by now you would have known stakeholder engagement is absolutely essential in the overall scheme of things. One needs to actively involve stakeholders internally as well as externally. Only internal is not going to be of any help. Yeah. Unclear boundary setting. When we talk about, let's say, boundary setting, you don't have to do anything on your own. The GRI standards very clearly tell you the whole idea why you pick up a framework is there is an expert who's already telling you what to do. All you have to do is, pick that up and ensure that, you are actually following that in your ESG reporting scheme of things. This again is becoming a problem because, if you look at the ESG report, it says something else, but the organizations are not walking the talk. Their thought process, their goals and objectives are not really well aligned with, let's say what the report basically speaks about, right? So the only way to do it, have an intent to do it and ensure that, all the material topics is well aligned with the goals and strategy that an organization has got. Uh, Again, I think it is very inherently uh, easy to understand this because there is an overemphasis only on the positive aspects. Now, the whole crux of, let's say, ESG reporting is to have both positive as well as the negative aspects of your ESG adoption, right? So this is where the principle of, let's say, what we saw earlier of, let's say, the GRI One Foundation comes into the picture. Have a right balance. You are free to report, whatever, let's say, positive impact that you have had in the towards the planet or towards the people or towards generating profits, but not at the cost of, not reporting, what, let's say, negatively or how negatively you are impacting, all the concepts or nuances around ESG. Inadequate data, this, I think, this may not be intentional, but many organizations are actually finding this a problem, saying that, how do we find, let's say, data? How do we get the data from? Or even if you have the data, what do you do with it? That is where you need to have very diligent processes. You need to have automation tools which have the capability to capture these data right from the data sources, ensure that these are getting converted into the right ESG metrics or matrices, and then this is being reported in the right gist and right perspective. Neglecting the emerging regulations, you have to be continuously be updated on what is happening in the regulation. You can't do something which, let's say, which was prevalent about 2 or 3 years back, right? That is not right reporting. That, fortunately or unfortunately, intentionally or unintentionally, again will amount to a greenwashing of sorts. Lastly, not to overcomplicate the report. Stick to the guidelines, stick to the framework. The framework is very beautifully devised. All you have to, I mean, for that matter, any framework, if GRI is not the one, if it is something else, most of the frameworks very beautifully elucidate saying how an organization is expected to go about. All you need to do is, apply your mind to what is being, told in the framework. If you keep doing that, I think, usage of simple language, visuals and summaries, which means, usage of graphs and figures and other stuff will obviously help. That is where I think, I urge you to take a look at the ICICI, Tata Steel, Mahindra's report. I think you will get a first hand of, in fact, you take a look at the previous year reports of theirs also. You will now know that, how they are actually evolving in their reporting scheme of things. Yeah. I think this is the last section, if I'm not mistaken. Now, I was also told to talk about, what are the tips to ensure the data quality, accuracy, and comparability are in alignment with the GRI requirements or the GRI scheme of things. Yeah. Needless to say, the data governance has to be right, top notch, right? When I talk about data governance, I'm talking about, I may sound a little technical now. I'm talking about, let's say, having your data pipelines in place, having the ability to ingest and integrate data from the multiple touch points or the multiple data sources that your organization is actually made up of, right? You need to have, let's say, the ability to capture data. And mind you, this cannot be, let's say, a manual process. You need to have a very high pedigree of automation to be in place. Now, if the automation is there, that is when, let's say, there is a continuous, clean, transparent passage of data through what we call in technical or technological terms called as the ETL pipelines. Yeah. An ETL pipeline has basically the ability to capture data from multiple data source. Uh, E stands for extraction, T stands for transformation, L stands for the loading of data. Yeah. Now, mind you, today from an ESG context, if you take a look at it, you don't need voluminous data coming into your ESG platform. You just need that relevant data which speaks that ESG language. All you need to do is have that ETL pipeline in place, have your IT department work very closely with the ESG teams or the finance teams and ensure that the data is coming in the right place. There is a strict data governance policies, no tampering with the data governance, because something goes wrong with that particular data pipeline, your ESG report is going to go for a toss. Your auditor is going to, let's say, pick up those points. He or she is going to qualify that particular line item, and eventually you will end up reporting something which is absolutely inaccurate. Yeah, so that is the basic crux. I hope you're able to see this. This is just the first word of let's say what you're seeing on the screen over here. Yeah, I mean, pardon me if you're not able to see this. Leverage a structured framework, absolutely important. Maybe GRI is not applicable for you. That's perfectly fine. You need to find which framework is applicable for you. Talk to, let's say, the ESG consultants, talk to the experts, get them on board, understand what exactly lies beneath. Because unfortunately we are also witnessing, when it comes to, let's say, the ESG scheme of things, perception is becoming bigger than reality. Yeah, the moment you talk about ESG, every leader pounces and says that, oh yeah, we know everything because it's all about environment. That is not the case, because it is a little beyond. And I think by now, at the end of these 2 hours, you would have known that ESG, or let's say a GRI framework driven reporting, is not just about, let's say, the environment scheme of things. It's a little beyond. So leveraging a structured framework is absolutely essential. You can't, and moreover, you can't really report on something of your own. It has to be a very structured framework or an existing framework which is of a international repute and which is acceptable in the international scheme of things. Yeah. Utilize advanced technological solutions. That is where I spoke about the data governance thing. That is one side of things. Again, even if you get those data pipeline, have an ability to collate your ESG specific data in a single platform. This data then needs to be converted into ESG metrics, correct? I gave you an example of the customer calling me for frequent meetings in his particular office, right? In one such, let's say, back and forth of me driving and sitting in their office and coming back, there are multiple touch points where I have been a polluter. So which means this whole transaction has the capability to emit, has the capability to be a polluter. Now this is data, right? Now this data then needs to come and sit in the ESG platform. The fact that a Kaushik Mahadevan went to a customer site and came back and sat back in his office, right? So it is a back and forth things, right? Like for about 30 kilometers of a petrol vehicle driven and an energy being utilized in the customer's place, which is, let's say, electricity and other stuff, right? Now, you need to have automated ESG platforms which have the capability to do this. Because mind you, an Excel spreadsheet is not going to help you. Maybe it will help you now, but over a period of time, when things start getting complicated, it will be too late for a, let's say, ESG tool adoption at that particular stage. So an ESG tool which has the capability to have a data governance framework, ETL pipelines, and a data ingestion policies in place is the solution for this particular problem. Yeah. Conduct periodic data validation, because again, as I said, data is the oil, data is the driving engine for ESG reporting. If the data goes wrong, you are in a mess. Ensure temporal consistency. I mean, what you report today needs to be consistent in the next year as well, right? You can't actually resort to, let's say, an adoption. It's like we for your fixed asset depreciation, this year you might have used, let's say, written down value. Next year you say you're suddenly switching over to straight line method. You may have some, let's say, thought process. You may have some, let's say, reasoning or a rationale behind it, but it needs to be qualified. It needs to go through a certain consistency layer check, so that there is a very definitive uh, reasoning behind actually doing that. Very important. Again, needless to say, nothing works without people. So unless and until, let's say, the teams are actually empowered, they are trained, your ESG reporting is going to be always a pain. Yeah. Uh, Mitigate your data gaps. You will very nearly have this particular challenge. In fact, some of our customers today are saying their thought process that at least 30 to 40% of the data doesn't exist with them at all, because they thought that that data is not relevant at all. We are living in a new era. It's a new age completely. So every data matters. So all data needs to be actually captured. So though it is very important in the first year to at least understand and be aware that there are data gaps. It is only if you are aware that then you can actually arrest that particular problem, right? Prioritize your scope 1, scope 2, and scope 3 emissions, because again, I don't see there are a lot of people realistically sitting down and doing this. This is partly because they don't know where the data exists. If they don't know, they will have to find a solution one way or the other. So speak to the experts and ensure that this is actually happening. Align with the materiality, because again, from a GRI point of view, materiality assessment, stakeholder inclusivity is absolutely important. It goes without saying that if you don't adopt this, your GRI journey is not complete. Enhance your data comparability. Over a period of time, you need to have, let's say, a reasonable positioning with the competitive landscape. You need to compare your, let's say, ESG reporting and see to it that what you're doing is right. And a good check will be to compete, or let's say, take a look at the competition and say that where exactly you stand today. Yeah. I think with that, I'm more or less towards the end of the session. And lastly, I want to leave with this particular saying from a very, very renowned German thinker called as Johann Wolfgang. He said, knowing is not enough. Yeah, we must apply. Willing is not enough. We must do. It's all good to actually learn or probably sit through these particular sessions and understand what it is. But unless and until you start applying these in your nuances, or let's say in your daily scheme of things, it's not going to be of actually help. And I would urge that some of the practitioners who are well aware, or maybe you have more knowledge than me. I think you need to talk, you need to educate, let's say, your customers. You need to ensure that the right set of practices are being followed. Otherwise, the compliance as well as the legalities are really getting stronger. Maybe India is a little slow, but I feel that over a period of time, ESG is going to be the crux of things. As I told you some time back, AI about 10 years back was godlike. Today everybody's feeling it. Everybody knows that, around you, AI is there everywhere, right? So it is no longer, let's say, something, which is of a distant future or something, right? So today the buzzword is ESG. And I think, all of us, we need to huddle and ensure that, we are taking care of, what needs to be done. And again, I leave this with all of you. The ESG clock is ticking. What do we do about it? We can and we should do everything that we can, and we do everything that we cannot. Yeah. With that, I close my session. Thank you so much. I hope that was helpful to all of you. I'm open for questions from your side. GRI and BRSR, what are the key differences and the approach? So BRSR, as I see, it is actually, let's say, a stripped down nuances of, let's say, what GRI speaks about. GRI is a little more holistic, but BRSR is now picking up steam. And I think BRSR is a very recent framework, right? They will need some time to actually, add more nuances to it. Right now, they have only come out with, let's say, a few pointers on how you're supposed to go about your reporting process. Like, simply put, a materiality assessment doesn't really exist in BRSR, although there is an outline of, how you're supposed to go about it, right? So GRI is a little more comprehensive today. BRSR is not. And the key approach right now, if you ask me, is the BRSR is a little more trimmed down. GRI more holistic. It is like, if GRI is 100, BRSR is maybe about 30 or 40 of, what GRI is actually all about. Again, I think it's the same question. Maybe what I'll do is, I'll probably draft a detailed response to both these questions, because I feel this is a little similar. Now that there is a second question around it. Now, see, the BRSR reporting does emphasize on all the aspects of environment, social, and the governance side of things, but there is no definitive process which says that, how are you supposed to, go about, let's say, doing this. It is evolving at this point of time, and BRSR is a little more region specific. Some of the aspects, like, if you look at various sectors that we exist, like in India today, e-commerce is actually big. Now, e-commerce is struggling today, how they are supposed to go about with respect to, let's say, their ESG reporting. Like, Zomato today is actually listed. Swiggy today is actually listed. Now, very soon, they will be actually, pushed to start doing their ESG practices. So these are some of the challenges, right now that this landscape is actually facing. BRSR, in my opinion, needs some more time to evolve and probably come out to, the GRI scheme of things. While the whole GRI very clearly gives you a process-driven approach, BRSR gives you a very pontificated approach towards how you're supposed to go about in terms of let's say your ESG reporting. The nuances are pretty much straightforward, saying that you answer these questions, you're done with your BRSR reporting per se. It is not as detailed, if you ask me at this point of time, but I'm given to understand this is actually improving over a period of time. Yeah. How many questions do you have? So do you want me to take each of these questions or should we respond? How do you want me to do it?
So we can take 2 or 3 more questions. We have 5 minutes more.
You let me know which one you want me to take. Otherwise, they'll say I'm biased.
Okay, sure, sir.
Yeah.
Okay, so there's an interesting question. What is the cost of complying with reporting requirements in India? Do you think in India stakeholders are concerned about ESG targets, reporting, etc., in terms of valuation?
Question number 5, you mean? What is the cost of
Yeah,
compliance?
question number 5. Yeah.
Not really, not really. I mean, it's too early at this point of time. If you ask me what is the cost of complying with reporting requirements, at least for, let's say, the top 500 SEBI mandated or let's say the top 1,000 SEBI mandated companies, there are consequences. But for the others, absolutely no. So are they concerned? The top 1,000 definitely need to be today. They need to be concerned about it. But there is no definitive, let's say, no legal consequence or a, let's say, any fees or any penalties or anything that they are being succumbed to or they have been asked to actually take care of. But in terms of valuation, it is definitely becoming very important. I'll give you again an example of, let's say, last year, Texas as well as BlackRock. In fact, when they were trying to invest in few of the companies here in India, they pulled back. They said that, I mean, unless and until, even if it is a startup or an existing portfolio of companies, if you're asking us new set of, let's say, money from the revenue tap, from the investment tap, the money comes to you only if you are able to prove that you have ESG strategies in place. You have, let's say, policies which speaks about this, and all your business practices are sustainable in a way where these frameworks are actually speaking about. Yeah. So in terms of valuation, it is absolutely important. There are organizations who are giving an extra importance to this because if you go to the large investors, there is easily, let's say, 1 or 2 multipliers adding up if you are able to prove you indeed are an organization very high on your ESG practices.
So question number 6.
Okay. Apart from reporting compliance, what are the value adds that a CA can add, especially on the impact materiality space? Lovely question. So today, I would not be able to, let's say, translate all of this to you had it not been a degree. I'm being absolutely candid over here because our understanding of business process and the ability, the fact that how this basically culminates into accounting, basically which let's say a business transaction culminates into accounting is something that we are very clear. Then comes your reporting, auditing, the whole nuances again, around, how let's say businesses work. So definitely, if you ask me, a CA is very well poised to take up this particular bit. You will be in fact surprised if you look at, let's say, a Middle East and a European market, organizations which are not able to afford, let's say, sorry, a full-blown ESG department or a sustainability department, the onus is now lying on the finance team, or the CFOs or the head of finance, to report on or have ESG reporting as one of the KPI or an OKR of sorts for them. Yeah. So absolutely, I mean, CAs are here to actually, I mean, add this to their portfolio. In fact, this again reminds me of the fact that, when I qualified, this was like, almost about 2 decades back. The technology, ERP and CRM was a new buzzword. Now, I took it up because at that point of time, not many were aware that, if you don't understand, let's say, the business scheme of things, you can't be a technology expert. You can't be a techno functional or a techno business commercial expert of sorts, right? So had it not been the CA degree, I mean, I wouldn't have become a technology enabled, let's say, functional or a commercial person. So definitely, as a CA, you can do a lot in this particular space. When you talk about, especially on the materiality space, I think materiality, again, it's a I mean, if you're speaking from a, let's say, sustainability context point of view, by now I think you would have heard about something called as double materiality, right? The first materiality being, within, which is traditionally we know the financial reporting, that we have been actually doing. The second materiality in a sustainability context is actually the how do I put it? The external reporting, the organizations, reporting back and saying that, this is what we are doing and being very transparent about it. So even from a impact materiality point of view, there is a huge that, let's say, a CS can actually contribute, especially because you understand the financial scheme of things. Whether lack of non-financial knowledge, absolutely no, but I think I need to understand this in a little more detail. But I don't think that, when you lack, if you are a CA, why would you say that, you don't understand the non-financial scheme of things? If you're understanding financial scheme of things, I think non-financial scheme of things should be easy to manage. I mean, unless there is something else to this particular question. On the last slide, I'll leave my contact details along with my LinkedIn reach out. I mean, probably reach out to me. I would love to have, let's say, a conversation with this particular lady or gentleman. What is greenwashing? Interesting question. So, see, many organizations today are either, half reporting or misreporting a lot of things. Yeah, in the context of ESG. Now, if you half report, if you misreport, or if you don't report, that is assuming you have to comply with, let's say, a certain regulation in an ESG context, is greenwashing. Very simply put, it is deceptive marketing. I'll give you a quick example of, let's say, what Volkswagen did about 10 years back. They came out with, a clean diesel vehicle. Okay. There was this huge launch. They sold more than 500,000 vehicles worldwide. But an assurance, in fact, an audit later on found out, they claimed that, their vehicle didn't emit emissions beyond a certain level. But an audit basically found out the emissions were beyond 40 times of the permissible limits. Yeah. Now that kind of has actually over a period of time become a classic example of greenwashing. Greenwashing is intentional or unintentionally half reporting or misreporting something which is away from the reality is what called as greenwashing. And the word green is typically used with environment. Yeah. Anything to do with, let's say, the social or the people side of things now is being called as blue washing. So these are terminologies in the ESG context, which is actually, gaining prominence. Do we have time for one more, Chindu ma'am, or how is it? Love it. Quite a few questions. Chindu ma'am, do we have time? I see there are only 3 minutes here. Hello? Hello? Please explain reporting requirements like to balancing. So, see, when we speak about, let's say, the balancing side of things, right now in a ESG context, what typically happens is an organization is actually expected to report both positively as well as negatively on the ESG scheme of things. It's like, if my organization.
यही से यहाँ से तो ये लैपटॉप से हो जाएगा ना, गलत हो जाएगा फिर लैपटॉप से ही कर लूँ क्या?
Chindu ma'am, can you just mute your mic if you don't mind?
Yeah, sure.
Sorry. So I mean, let's say my organization, I mean, if it positively or negatively impacts the environment, the social and the governance side of things, I'm expected to report this, right? So increasingly what we are seeing is, ESG ke naam pe, organizations are only reporting the positive side of things. So which is why the slide number 2 of balancing basically speaks about the fact that one of the key principles is, to have a right balance of reporting the positivity and the negativity side of things. How do we start for the GRI certification? Very easy, sir. Go to the website. So, sorry, sir, madam, whoever it is. Go to the website. Very clearly tell you exactly you're supposed to take up. If you want to become a sustainability professional, there is a full-blown 6 months course which you can actually take it up and take your certification on your own convenience. Does GRI advocate any?
So maybe we can ask the participants to email us, and maybe we can report them to.
Sure.
Yeah.
Sure. No problem. Sorry. Thank you so much, Sindhu ma'am, and everyone there in the Delhi office. This is my details. This is my QR code. Please feel free to reach out on LinkedIn, and we can take this offline. And I look forward to your questions as well once you send it to me. Yeah.
Sure, sure.
So,
Thank you so much, sir, for your comprehensive exploration of the GRI Universal Standard. Your detailed guidance on GRI 123, along with the updates in the 2021 revisions, has provided us with a clear understanding of their practical applications for reporting entities. The actionable tips and the illustrative examples that you shared have empowered participants to navigate the common challenges, enhance their reporting accuracy, and alignment with the GRI requirements. Thank you so much, sir.
thank you. Totally
As
appreciate
we
it.
conclude this enriching session, we extend our heartfelt gratitude to CA Kaushik Mahadevan sir for sharing his deep expertise and practical insight into the GRI Universal Standards. We also sincerely thank the Chairperson and Vice Chairman of the Sustainability Reporting Standard Board for their steadfast leadership and support in organizing this informative webinar. Lastly, a big thank you to all our participants for your active engagement throughout today's discussions. Your thoughtful questions and contribution have added immense value to this learning experience. Together, we are fostering greater transparency and accountability in sustainability reporting. We encourage you to stay connected with us for upcoming webinars and initiatives as we continue our collective journey towards building a more sustainable and transparent future. Thank you once again for your participation. Take care and remain committed to sustainability excellence.
Thank you for the
Tech,
wonderful opportunity. Thank you.
thank you.
Cheers. Thanks.
Tech support, you can stop the